thank you to all of our witnesses for offering your expertise in this area. Your perspectives and opinions are incredibly important as Congress monitors the global financial system, and I look forward to hearing those opinions. Barring consideration of reauthorization of the Export-Import Bank, which both me and the chairman are leading on, I cannot think of a more timely topic. The United States and Greece are a tale of two economies. In 2007, our country experienced a housing crisis driven by low interest rates, poor underwriting, and outright fraud, and then a financial crisis driven by lax oversight and regulation and a complex financial system we didn't understand. The nation's real GDP fell by 2.6% in 2009, the largest decline in 6 decades. Our unemployment rate rose to 10% in October of 2009. Unfortunately, we have a mature economic recovery, in part because of federal efforts to buoy the economy and actions taken by the Federal Reserve. 5 years after the onset of the global financial crisis, however, Greece's economy remains in turmoil. The country has experienced what is essentially a second depression. Since 2007, the Greek economy has contracted by nearly 25%. Unemployment has tripled to nearly 25%. Youth unemployment is over 50%, and public debt has risen to 173% of GDP. The causes of Greece's precarious situation are multiple and complex, and I look forward to our witnesses shedding some light on how we got here and where we go from here. Much has changed since Greece negotiated its second financial assistance package. Ireland and Portugal, countries who also turned to the Eurozone and the IMF for financial assistance, successfully concluded their programs and have returned to capital markets and are in the process of repaying the IMF early. The economies of the Eurozone, barring Greece, have strengthened, and importantly for the United States, private financial institutions have substantially reduced their exposure to Greece, and policy measures adopted over the past several years have lessened the chance that a Greek default or an exit from the Eurozone results in another global financial crisis. As Greece and its creditors negotiate a third and hopefully final financial assistance package, several points appear clear to me. First, we must balance fiscal responsibility with economic development. The Greek people have suffered an unimaginable hardship. The economy will remain in shambles for years and, unfortunately, likely decades to come because of poor decisions and potentially because of severe austerity policies. Second, we must continue to develop and implement a sound regulatory framework for viable global financial systems through international cooperation. I'm hopeful that Greece and its creditors will reach a pragmatic compromise to prevent more hardship for the Greek people and calm the situation in Europe. Thank you, Mr. Chairman, for bringing this hearing together on this very important topic, and I look forward to hearing from our witnesses. Thank you, Mr. Chairman. You know, there's an old expression, don't go looking for trouble, trouble will find you. And I think in part we're in that spot where what we look at when we look at numbers is that this is the chance of a catastrophic contagion in the near term, certainly by the majority of testimony here, doesn't exist. I'm intrigued by the dollar value, which has obviously a very dramatic impact on any state that produces commodities and relies on exports. We're already challenged in the export area because of a high dollar value, and I'm intrigued by that. I've been thinking all along about this hearing and about the significance of trying to track the impact on the American economy, and it seems to me that of all the things that I've heard today, that's probably the thing that raises again another rush to a safer currency, a safer economy, which is right now the American economy. But Dr. Kierkegaard, if I can ask you to kind of respond to some of what you've heard here as it relates to the immediate impact. I know you've already testified, but if you were going to look more than the near term, which is a lot of what the discussion that we've had and look, down the road, a couple years into the future, what needs to change to stabilize the overall Eurozone, but particularly those economies like Greece that are challenged at this point with low growth rates. What do we need to do?
Well, I think, first of all, what Greece needs to do is to avoid defaulting. Because if it defaults, it will lose access to the European Central Bank very quickly. As I said, if there is no agreement over the weekend, I will predict you'll have deposit control in the country, which sets in motion another very, very dramatic economic decline.
And as we have heard earlier from earlier testimony on this panel, we're already seeing some of that flow. We're already seeing some of that withdraw from regular banking institutions, correct?
Yes, but I will stress, though, that in some ways, in my opinion, what is actually remarkable is that there is still, by the latest data, approximately 120 billion euros left in the Greek banking system. And we have not seen deposit withdrawals in any of the other euro area countries. And I must say that I'm personally quite skeptical that we will see this even in the event that there is a Greek default. Because I think as we look forward, we have to recognize that this will be a very dramatic and traumatic experience for the Greek economy and the Greek population, despite that they have already, of course, suffered tremendously. If they default, things will get a lot worse. But if you're looking at Greece in other countries, and I mean Podemos and other political movements in Spain and elsewhere were mentioned, we have to ask ourselves, what is the lesson that you then draw from events in Greece? Is it that you should follow the policies of the current government and take your country into such a catastrophic path? I would argue that it is not. That in fact, if Greece is going to default, which as I said is not what I think will happen, but were to happen, I think other populations in Europe will look at that and they will draw the conclusion that this is not the right way to go. So I think we should be very careful in over-dramatizing the political contagion from current events in Greece. And I would also say that the sometimes expressed notion that if Greece were to leave the euro area, it would automatically turn the euro into a so-called fixed exchange rate regime, which is of course a much brittler or less solid entity, I also believe to be conceptually flawed. Because what we're looking at here is actually not the collapse, inevitable collapse of the euro area following one country's exit, but it is actually rather the difficulties, as I alluded to in my initial testimony, of Greece actually succeeding in introducing a new currency, because the euro will still be there. And you're trying to institute a new currency, the new drachma, whatever we call it, side by side with the euro. And I don't think the current Greek government is going to be able to institute anything, any new currency that actually retains the function as a store of value in that currency. Which means that we're not looking, therefore, from experiences from previously collapsing currency unions, the Soviet Union or Yugoslavia or things like that, but rather we're looking at something which hasn't happened before in history. As far as I know, there is no example of a country that have fully dollarized, for instance, and actually reversed that decision.
Okay, I think those are all important parts, and if I can just make another point from the original panel's testimony. Dr. Slaughter, I think you mentioned the lack of innovation, the lack of investment in aging populations, the lack of investment in research and development, and part of that's driven by this immediate move towards austerity. And so, when we look at the austerity measures, it's kind of like where's the appropriate balance? Obviously, we all know that in a spending crisis, in a fiscal crisis, you need to make those adjustments. But one of the things that you said that concerns me is the amount of GDP that's spent in investment in the things that we normally say will be leading indicators for growth in the future. Looking at this, what's happening in Greece, and looking across kind of all the economies, how do you measure that balance between austerity and fiscal responsibility?
Great question, Senator. I think a couple things come to mind. One is, and it connects with your earlier question about what happens in the next year or two.
Yeah.
In some basic sense, I think part of the challenge for Greece is, of its elected and appointed government officials, all of their time and energy and then some is spent kind of day-to-day with the crisis issues that we've been speaking to here. And I think the policy issues that speak to more sustainable economic growth, no fault, but an observation, simply aren't being talked about there. So for what ideally would happen in the near term of the next couple of years is some regulatory reform would be put into place by the Greek parliament and others to introduce private capital in particular to help stimulate some of the research and development and economic activity that we're talking about. To their credit, Greece has made some substantial progress on this in the past couple of years, despite the crisis. So the World Bank has its doing business rankings that it assembles. Greece's position in the World Bank's doing business rankings has risen from 109 in 2011 to 61 today. It's been one of the largest increases of any country on the planet. So they have made some progress. And many countries in Europe and elsewhere, think of the Irish experience over the past 30, 40 years, a lot of the growth and jobs and opportunity come from international investors coming in to build new businesses, to make those investments in jobs. So you've got agriculture, you've got tourism, you've got some industries in Greece that have more potential, and hopefully that's something that will flourish more in the years ahead.
Well, and that's the challenge, not destabilizing the economy to the point that you can't attract
Exactly.
international investment. And,
Exactly.
and there we are.
Yep.
You know, and I only say this, not that it's our job here in the United States Congress to try and help Greece achieve the appropriate balance, but I think, you know, at a much smaller scale, we're in that same discussion here with the American economy, which is how do we, with sequestration, which is a form of austerity, how do we make those appropriate balances? And so it's informative, and I really appreciate your testimony. I thought it was very, very timely and topical and important to hear.